Turkeys, dogs, and bulls. Oh my. Hi, Dean Jenkins with FollowMeTrades.com. And you've heard that famous saying, lions, tigers, and bears. Well, I say turkeys, dogs, and bulls because we got those are the headline items right now. First, of course, late last week, the unraveling of Turkey's lira caused a bit of a jolt to the markets, and there's concern about broader contagion and all that stuff. Who knows? We'll have to see how that all plays out. Dogs, we're in the dog days of summer, the term used for markets that, there's just not a lot of activity. A lot of market participants are on vacation traveling, and so movement in the market seasonally and historically has been kind of muted. And then bulls, because hey, we're still in a bull market. Technically, the market is still heading up. It's still in a bull market. It has not shown an end to that. So, what's a trader to do in the face of turkeys, dogs, and bulls? Well, let's take a look here at the S&P 500. I'm showing that chart right now. And for months, I've been talking about this pattern of higher highs, higher lows, higher highs, higher lows, on and on. And we went to a high in this sequence starting, back in April, but it was absolutely rejected at the high, the all-time high from January of this year at the S&P 500. And it looks like it's going to continue and pull back probably to at least 2,800, somewhere in that range, down to the prior low, and that would coincide with the Ichimoku cloud. So we're looking very highly probable this pattern will continue and will drift on downward to 2,800. Probably not enough profit in that to try and trade. It's a pretty small move, and barring some new information, a jolt or shock to the market that causes things to move radically up or down, we could probably expect just this slow drifting and continuation of this pattern. So that's the bad news. That's kind of hard to trade. But the good news is there's always great trading opportunities available in the markets. And we've been testing here at Follow Me Trades some new analysis that we're adding to our existing analysis and tool sets. And it's really exciting. It uses artificial intelligence and looks at very deep and sophisticated intra-market correlation for individual issues and how they correlate to a really large set of other factors like currencies and indexes and interest rates and many, many other things. And the initial results are very, very promising. We identified some test trades that we took last year using this new method, and let me show you a couple of those. So the first chart I'm showing here is CSIQ, Canadian Solar. And this was a shorter term trade, and again, it gave some insight using the new tool with the AI and intermarket correlation analysis to capture a short term, pretty volatile move, pretty good move on Canadian Solar. We got in at 13.57, caught this nice move up to $15. We took some profit and then ultimately exited the trade with a handsome profit. We were only in the thing less than 10 days and knocked out a solid short-term gain. So that's one example. And on the other side, we took a short on IGT, International Game Tech. We went short at 24.74, had a nice sharp move that met my prior rules. And again, the new technology that we're testing predicted a pretty sharp move down in IGT, so we took it short 24.74, ended up getting out down here at 21.25, and that was a great trade. We were in it 8 days, made 13% profit in pretty short order. So those are some samples. We're going to generate a much larger sample base. We've got about 10 trades like this that I just showed, one long, one short. And once we have a statistical basis across a wide variety of market conditions, we'll begin to employ that in our trading methodology. But the early results are very, very encouraging, and we'll continue to report on that. And then if those good results continue, roll it into the Trading Pick service. So pretty good stuff. And the whole point of that is, in the midst of these dog days and maybe a lack of overall market activity, there are still great trades to be had if you know where to look and how to manage them. Let's go ahead and shift focus, as always, real quickly to gold and then oil. Gold, once again, looks like it's putting in a bottom. It's faked us out. Here there was some consolidation, here, and again. So we're not going to jump on the gold bandwagon until there's clear proof of it moving up. Do expect that, but we're going to have to be convinced. So on hold for gold right now. And here is the crude oil futures, and this still looks bullish. It's volatile, but just look back over the whole year. Highs, pullback, highs, pullback, highs, pullback. Finding support right now. We expect more highs and to get above the previous high, above 75 on oil. Oil's tough to trade. If there is a good setup, we'll take a longer term trade on that, but watching and waiting on that right now. Last week we had said to watch the Russell, and it really did nothing through last week, went pretty flat. I think it's still important to watch, and if it starts to tank, it could lead the rest of the market down. But meanwhile, we're going to focus on the S&P 500, and like I said, expect it to drift down to about 2,800 unless new information enters the market. So that's the update for the week. We're expecting the overall markets to drift downward a little bit. We're going to watch the Russell to see if something bigger is going to happen. Gold, waiting for a rally, but it is not proven yet. And oil, we believe, is continuing higher. And before we take a trade, we're going to look for just a little bit more proof. Well, that's it. Thanks for listening. And as always, send your questions, your comments, your feedback. Love to hear from you. All right. Take care. Dean Jenkins. Follow Me Trades.